little bit mixed, but it's largely lower for the Asian market.
Board expects me and the team to change the gears, and that's exactly what you're going to see.
We are on the Nifty 160 odd points away from an all-time high.
Inflation numbers came in lower than what RBI forecast for April, May, June. So they have to lower it.
They aspire to be at the forefront of the global battery manufacturing industry. Just about consolidating our gains in the first tick on the index.
What the market is focusing on as of now is some recovery in volumes.
Our ambition is to double our data revenues.
The MPC decided unanimously to keep the policy repo rate unchanged.
I don't think the loan rates are going to go up in any significant manner.
The Nifty now at 18,767. 777 has been the high. We're practically there.
The growth momentum is extremely strong.
BofA Securities has actually upgraded Paytm to a buy.
Will you look for more enduring ways like, an OMO purchase or something like that?
We'll remain nimble, we will remain flexible.
It's around 86 points off from the day's high.
All right, you're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. And we're going to get you the next hour, the last hour of trade this Thursday afternoon. I'm Prashant, with me, my colleagues Reema and Sufi. Guys, hi.
Hi, afternoon.
Hi, afternoon. One big event done and dusted, the RBI monetary policy. So now we'll talk about the US monetary policy, right? Next week.
There's always something, right?
There's always something
always
to look
something
ahead
to look forward to. But markets are taking a bit of a breather, right? I mean, I think it's pretty clear that that is the case, but nothing large. Off the highs, but not really going anywhere. I was joking with someone that 10 years ago, we used to say that the market goes up on a staircase and comes down on an elevator. It is the opposite now. I mean, the market goes up on an elevator and slowly ambles along lower, sideways, gently, nothing sharp. And that's what you're seeing here as well. And I think this would hold over long periods of time. I mean, I'm saying 3-4 years. Nothing, especially in the last 3-4 years. And we're seeing one more that kind of a day. 18,679 or so. Just below the all-time highs on the index. But we'll get to the larger discussion a little later. RBI threw no surprises at all, although it did kind of resisted the dovish temptation I was saying earlier. It's not changed its stance. Everybody was expecting a pause, but some were saying, well, maybe they will change their stance, which has not happened. Advanced decline today is a little negative, and that is after many, many days. But again, nothing dramatic there. Some 400 stocks separate losers and gainers. And global markets are pretty tepid. US futures are flat. I don't think there's any big data point later today which may decide things one way or the other. In the US, things, I would say, actually are getting better. It's not just 7 stocks dominating all of the gains. The rally is broadened out. The small caps are participating. The banks, which were on the sidelines, they're participating as well. But it's just recent, last 4 or 5 days, we need to see continuity there as well. So it's a quiet day right now. Reema.
Hi. For me, the big takeaway is that the RBI has messaged the markets. They've guided to the markets that don't expect rate cuts anytime soon. They're likely to remain on pause for a longer time because of their laser focus on inflation. So they could be in for a pause longer than what the market was anticipating. There were a few economists who were looking at perhaps a rate hike happening as early as the end of this calendar year. Now, those expectations may be pushed back, and that was a reset which took place in the market somewhere around 11:30, 11:45. The good part is, after that one reset down, the markets have largely been stable. So the Nifty is currently at 18,690. It's a cut of 37 odd points, but the last 2 hours have been around these levels. The real estate index has taken the biggest knock today. So the realty index is down 1.2%. Banks haven't fallen too much considering it's an interest sensitive. So the Nifty banking index is just down close to about 0.1%. And that's because names like HDFC Bank, HDFC Limited, State Bank of India are all holding up in the green. So it's a mixed bag in the banking space, and they're helping cut the losses on the Nifty bank and hold it afloat. IT is under pressure, so Tech Mahindra is in fact your top Nifty loser right now with a cut of more than 2%, and the other large caps are following suit. And outside of the index, it's Power, which is caught my attention. NTPC, Power Grid, NHPC. 2% gains, but that's the pocket which is active.
Oh, absolutely. There is some buying quite evident in that space. Profit taking really, I think, in areas of the market that had moved up. Autos, like you mentioned, a lot of those auto stocks at 52-week highs.
cooling off just a little bit. I want to mention one or two other names from the broader market, though today is a day where the mid-cap index is also taking it easy. It is down a little more than the Nifty at this point in time. That's the mid-cap index for you. The advance decline ratio is negative, no taking away from that. So yes, it is a very definitive profit booking kind of a session. So no denying that. But there are individual stories as usual. So I want to pick up two stocks from the so-called new age economy. One is PB Fintech, the other is Paytm. And today we had an interesting note from Bank of America. They are positive on Paytm, think that this is a good journey to profitability. Their target prices are above northwards of 800. They're negative on PB Fintech, saying perhaps a lot of it has already played out and the price is already factoring in the best, at least at this juncture. So those divergent views on those two stocks, and both the stocks reacting today. In terms of some other interesting up moves, if you talk about gainers, you do have some names, even in a declining market. I mean, you have something like a JBM Auto, Car Trade, some of the tier 2 auto sector names, ancillaries, so to speak. These are stocks that are on the upside, on the winning tally. That's JBM pretty much at the day's high today. Ather Industries, has been news on that stock as well, and that's been up on decent volumes as well. So Ather is up about 6%. Basically, some of the auto ancillary or related auto players doing well today. I want to talk about oil marketing companies because that's again a very straightforward trend right from the morning. Your IOC, BPCL, HPCL all down in anticipation of this fuel price cut, potential cut that Sapna alerted us on. So that's one space in focus. And Mazgaon Dock, probably another stock that we've spoken about a lot in this week. After that huge rally that we've seen this week, there's a day of profit taking on Mazgaon today because the news is out. We know about their tie-up with ThyssenKrupp when it comes to submarines. So lots of stocks in news. We will cover these and more as we go along. Let's in fact tell you what's lined up on the show today. So RBI's Monetary Policy Committee decides to hold rates and keep its stance unchanged even as it sees economic growth holding up and inflation staying near the 5% mark in FY24, well above its target of 4%. All the highlights coming up, and a couple of stocks in focus as well, Reema.
Yes, Paytm is surging on the back of a positive brokerage note from BofA Securities, while PB Fintech is under pressure, and that's because BofA has downgraded the stock to an underperform. So key highlights from the brokerage note coming up.
Shares of Gati have been surging today after the company reported a strong business update for the month of May. We will get you all the details.
India will need huge amounts of steel, says JSW Group Chairman Sajjan Jindal to CNBC-TV18, explaining why JSW Steel is spending $25 billion to up capacity from 28 to 50 million tons by 2030. He adds that cement and the infrastructure business could go public in the next 2 years. Key excerpts from that conversation coming up on the show.
And of course, we get you market perspective. Our guest on the show today would be Mithun Ashwath of Kiva Advisors. All that and more over the next 50 minutes.
Okay, well, how should you position yourself in the next 1 hour, last hour of trade? That's the question we're going to put to Rahul Mohinder of VeritechIndia.com. Rahul, good to have you with us here. Thank you very much for your time. 40 points lower, Rahul, 18,688. Is it a trade on the index or just stay on the sidelines and let prices tell you what to do? Or would you jump straight in and buy this dip, however small it is? What's your sense?
Good afternoon. I think, yes, we are seeing a correction. And this entire rally up, like you were commenting a few minutes ago, we've had, small little, dips, and every dip has really been bought into, very typical in a well-established bull trend. And I think, again, it's one of those corrections where you see slimmer volumes, where you see, individual stocks coming to support potentially. That points to the fact that we would probably run up again. If we look at the entire rally, in fact, just rotating back the last 2 or 3 months, probably April, May, June, the maximum we've really dropped from top is about 400 points. And here we've dropped about 100 points from the peaks of yesterday. So I think we're still clearly in correction mode. There's no panic. There's no breakdowns, which I'm seeing. Would I buy straight out? I think no. I would wait for the market to claw back above 18,700 on a close for me to kind of come to an establishment that, yes, we're on track for that new high. Whilst that new high looks visible to me, I think it's just about timing it a little better. So if you're an intraday trader, I would have liked to see 18,720, cleared out in the little run-up that we saw a couple of minutes ago. We couldn't do that. So keep your eyes on that 18,700 on a close basis. That's important. And on the downside, as I said, from a larger perspective, you have supports all the way down to 18,450, 18,500. So I think you're still really in corrective mode with a strong bull trend established.
Okay, let's talk about the stock ideas as well, Rahul. So looking at the market right now, given that it is so stock specific in nature, what trades are you going with?
I think metals really comes to the foray straight out. And, when you look at a lot of the price action, of course, GSWs had that effect on the stock, but just looking at individual names like Tata Steel, I can clearly see that there's a visibility of moving to about 116 to 117 levels. So I'd buy Tata Steel at the current level, keep a stop loss below the 109 mark. That's a support for it. So keep a stop just below that. Even within metals, Hindalco is a stock that's been on the quieter side, but again, good supports at 415. So if you can keep a stop loss below that, just a short-term target would be around 429, 430. But clearing that is where you'd see some good traction, maybe getting to even 442 levels. The other stock which hits the radar, of course, today is NTPC. It's cleared the previous peaks, and I think we're good for 188 target. I'd continue to buy as a short-term trader with 179 as a stop loss.
Thank you very much, Rahul, for highlighting those recommendations. Let's talk about Paytm. Well, today there was a positive brokerage note from BofA Securities, but on the flip side, BofA downgraded PB Fintech, and that's putting pressure on the stock. So to talk about the tale of two cities, Sonia joins in with the details.
Well, thanks a lot for that. As you rightly pointed out, BofA Securities has upgraded Paytm while they have downgraded PB Fintech. So let's talk about that. They've upgraded Paytm to a buy and raised the target price to 855 from 780 earlier. They speak about how the revenue momentum is very strong, and that's something that's expected to continue going ahead. They also talk about how the operating leverage has some room to surprise on the upside, and the competition is limited at the moment. The big trigger really for Paytm is digitization in the payments infrastructure space, and that is something that will continue to drive the earnings growth for Paytm. Also, the company is sitting on a strong cash balance, which is always a good thing. Now, on PB Fintech, it's a valuation argument here. They have downgraded the stock to an underperform from a buy with a target price of 600 rupees. They talk about how the path to achieve 1,000 crores of net income is well flagged off, and their growth is slowing down on the back of a high base. They also talk about how the company is good, but the improving profitability is something that has already been priced into the stock. So if you look at the valuations, currently the stock is trading at 6x FY25 compared to Paytm at 3x. Any higher than expected competition from peers like Insurance Deco is something that could derail their growth further.
Okay, Sonia, thank you very much for putting that in context for us. So Bank of America there, positive on Paytm, not so much on PB Fintech. Let's get Devain Choksi into the conversation. Devain, good afternoon. Great to have you on the show as always. So I just want to start with these two stocks in case you have coverage or if you have a view on them. How are you looking at some of these new age financial plays, so to speak? And what's your own house call on both Paytm as well as PB Fintech?
Yeah, Surabhi, good afternoon. We have been tracking these companies, but haven't been bringing to the full coverage at this point of time. Largely because of the fact that, yes, I think the business models are great. That's not a question here. Slowly and gradually, in case of Paytm, I think we have been seeing some amount of reduction in the loss, and I think they have started becoming the EBITDA positive, of course, with some accounting adjustments. So we believe that I think if this particular journey continues, then there is a reasonable amount of ground for them to possibly, I think, show relatively better performance going forward, largely because of the fact that you have a very strong proposition in form of UPI and now ONDC. Both this stake, I think the IT stake that we call it as, both of them are basically remaining absolutely convincing for the business model of Paytm. Should they continue to grow more on the profit side, then definitely I think there is a case to argue. At this point of time, I believe that I think larger amount of momentum is because of most of the investors, houses or brokerages and the analysts, they're putting amount the buy recommendation, and that's where I think the stock price is getting fueled. We are watching them closely. We would like to see how sustainable this model is going to be, and then possibly, I think, take the investment call as far as the business outlook is concerned.
Devian, do you look at Tata Communications?
Haven't looked at recently, but I think the kind of commentary that I read, it sounds, I think, relatively more optimistic at this point of time. Particularly, the company is talking about increasing the margin and sustaining it around 24-25%. It sounds, I think, reasonably good amount of optimism, but let's see how in competitive scenario they work. As of now, we don't have the full coverage on the company, so I will probably study it well and then probably talk it out.
So what Tata Communications said is that they will double their data revenue business. Their data revenue business was 14,000 crore last year. They expect it to go to 28,000 crore by FY27. Now, this would require a 19% revenue growth for the next 3 years. But if you look at the company's past track record, the data revenue growth has only been 6.5%. So the street is saying, well, that looks a bit ambitious. If you've been growing at 6.5%, how do you expect to grow at 19% for the next 3 years to achieve that target? So that's, the street is not very convinced about the ambition laid out by Tata Communications at the Investor Day. And plus, in FY24, the company has already indicated that margins will be below their guided band of 23 to 25%. And another concern raised is that if your revenue is going to double, then operating leverage should push up your margins. But it's not. You're just maintaining your margins at 23 to 25% over the longer term. So that's been an added concern, which is why today you are seeing the stock sell off a bit. And plus, remember, it's also rallied. In the last 1 month, Tatacom is up, I think, about 15-18%. Pull up a 1 month chart of Tatacom. And in the last 1 year, the stock has gained more than about 50%. So that's 15% in the last 1 month and 50% plus in the last 12 months.
All right, Tatacom for you. Now, Gati is another one which has been up and about 5-6% since the morning. It's got a strong business update to go for it. Vivek is here with a quick snapshot of the details in terms of what Gati is saying the month has been like. Vivek, over to you.
Well, absolutely right. So the stock up move is sustained throughout the trading session. This is mainly on the back of the fact that number one, volume update, the May operational update that the company has given has been quite strong, quite encouraging. Volumes for the entire business that includes both the surface as well as the air express segments has come in at close to 98 kilotons. And this is up almost 9% on a month-on-month basis. Even on a year-on-year basis, optically the growth looks low. However, and it's up 1% on a year-on-year basis. But however, the management has said that May of last year, actually there was a much higher base due to significant disruption in the logistics industry in May of 2022. So what the management has stated is that the volumes continue to show an increasing and an improving uptrend. And in fact, what they're saying is that volumes continue to remain quite healthy. No wonder then you're seeing the up move sustained throughout the session.
All right, Vivek, thanks very much for that. Devin, I don't know if you have a view on Gati, you track it or own it, but I wanted actually your thoughts on power stocks, which we were talking about earlier when we started. Names like NTPC, etc. Generally, one is starting to hear that these might be good stocks to own. JSW Energy, for example, perhaps the only one which has got spot capacity, which it can sell if there are power outages, etc. Generally, shortage which comes about at some point in the year. No new real big capacity has been added over the last couple of years. What are your thoughts? Which one do you like here, if you do like the space?
Prashant, I think, on one side, there is no denial of the fact that I think like of NTPC or Power Grid for that matter, government-owned companies, they have got the ability to source money at probably lowest cost. I think there is no denial on that particular aspect. At the same time, I think the assured return is continuing for them. So that part, I think, is definitely taken care of. Whether to own these particular companies from investment perspective, I'm not too sure, because many a times I think we have encountered in most of the cases of government-owned companies, I think the pricing scenario is not something which we can easily predict. I think at a stroke of a pen, I think they would probably change some of the policies, and I think the things would start changing different direction. So yes, I think great businesses, but not so great for investors, as I would like to put it across.
Okay, all right, Devin, thanks for that, but we'll watch the space. By the way, I just want you to pull up IEX. it's a sharp cut. It's a waterfall fall. The stock was, I think, at about 230. The price was 147. It sold off to 137, 138 right now. You can see that. It's a very, very sharp fall. Almost all of the cut happening after 2:30 this afternoon. In the last 15 minutes or so, a little over 15 minutes or so of trade. I think there are some regulations with regards to pricing, which the government is talking about, which is basically the cause for this. We'll have more from our research team in a bit from now, but this is regulatory in nature and to do with pricing. Basically, the concern with IEX seems to be that with what is being proposed, it'll become like an aggregator, but with little in terms of pricing, which will be decided by another agency, a government agency, which has not been named or has not been decided, but it won't be in the hands of IEX anymore. So that's a very sharp cut which is coming. But, we'll get you more on this story in a bit from now. But let's go back to the bigger story of the day, which is, of course, the RBI and what they've done and what they've not done. What they've not done is given to, the temptation to change their stance. Lata is here with the editor's take. Lata.
I would call it an unexpected hawkish pause. Other things are expected. The rate was not expected to be changed. Pause continued as expected. As well, the very wording of the stance has not been changed. That's what our poll showed. But there were minor hopes here and there that the stance would be withdrawal of accommodation, but some softening. No, there is no scope at all. In fact, they have actually been hawkish. And I'll tell you 2 or 3 reasons why I think it is a hawkish policy. One, almost everyone expected that the inflation forecast would be revised down to either 5%. That was the conservatives. And the Dove saying it could be 4.9 or 4.8. Lo and behold, it is 5.1. Not even come to 5, which means the first quarter, the inflation forecast clearly has come under RBI's expectation by 50 basis points. They've just arithmetically removed that and given you. They have not assumed that the momentum of slower inflation will go on to the second half, which is what many people assumed. And the fact that they haven't assumed that clearly makes this a hawkish pause. The other point is the repeated insistence that we are not done if we just come to 6%, because the target for CPI is 4% plus or minus 2%. Coming under 6, you are within the target, was how the market was interpreting. By saying it, I think about half a dozen times that you have to, we want to be CPI to be aligned to the target of 4% was very clearly a very, very hawkish stance from the Reserve Bank governor. And even on liquidity, there have been instances when rates have been, when yields are falling in the bond market and banks dropped yields or dropped lending and deposit rates just by 5 basis points or something. Reserve Bank just swooped and sucked out all the liquidity, which is coming in probably because of the 2,000 rupee notes in part. So the fact that, and they said it, what will be your response when banks cut? You saw our liquidity response was the answer, which means we won't tolerate yields or rate softening. So I would therefore say it is hawkish. There was just one line which I would say is dovish, where when asked, are you not going to change till inflation gets to 4%? The answer was, we want CPI to be aligned to 4%, not at 4%. So that was a bit of a giveaway, which means they may probably change their stance before you get to 4. Beyond that, this was hawkish and how.
Lata, I think markets always feel they can second-guess central bankers. Central bankers today, in the last 24 hours, are saying, we don't think so. Look at Australia, look at Canada, look at the Reserve Bank of India today. And I think that reality check is playing out in the market.
And they have, I guess, people have lost money in the swap market. Spot yields have not moved much, 6.98, 7%. That's it for the 10-year yield. But if you're a player in the swaps market, they were factoring in a cut in October, about 2-3 weeks back. After the non-farm payroll, it was December. Indian swaps, a rate cut from RBI in December. Now the market has pushed it to February, and even there, like an 80% chance. Even they're not 100% chance.
So rate cut expectations have been pushed forward, quite considerably, and the market is a bit disappointed. Lata, thank you very much for that. Get into a break. We'll come.
Just look at the market, which is sold off, right? I mean, it's selling off hard. I was pointing out IEX, but it's not just IEX, right? There's a very sharp cut in the last 10 minutes, exactly 10 minutes. We were at 18,700, and in the last 10 minutes, the Nifty has given up 50 points. There you go. The Nifty will come up. Yeah, that's the one. Kotak Bank is basically having a disproportionate impact. 15 index points, gone as a result of Kotak Bank selling off. And here there has been a bit of a slide post 2 o'clock. TCS is at number 2 with about a 10 index point pressure. Axis Bank and Lever are some of the others which are at the margin putting the most amount of pressure out there. So we're at 18,649, and it'd be good if yesterday's low perhaps is held. We'll see. 18,636 was the low. The big one, the swing low, of course, is the low of the low that we had on the 5th of June. But that's some distance away. I don't think we'll get to that today. But it's a sharp sell-off which we've had. With 80 points on the Nifty now gone. We'll take a quick break here. We are back. We have Mithun Aswath of Kiva Advisors joining in on the other side. More on market.
Welcome back. The entire market is down. The Nifty is down to levels of 18,650. 83 points gone on the Nifty. It's a 0.5% slide across the key indices, and it's moved down today in a step fashion. The first fall at 11:45. Then the markets were stable around 18,700, and in the last 10 minutes, it's further taken a leg down of about 50 odd points. So courtesy, we're lower by 80 points. But there is one stock which is holding up quite smartly, and that is JSW Steel. In fact, it's up 2.5% today. Nigel is here with the details. There was this big conversation which took place with Sajjan Jindal, so he'll throw in the key excerpts from that as well. Nigel?
Well, that's right. Investec has come out with a note on steel, and in particular JSW Steel. Let's focus on what they have to say on steel first. They're taking into account that, yes, domestic prices are at a bit of a premium in comparison to import prices, but they are focusing more on spreads in comparison to pricing. And they say that, yes, that could be a bit of a decline in the first quarter, but in the subsequent quarters, that's quarter 3 as well as quarter 4, the steel spreads will look up, which will be good news for steel companies. They prefer flats in comparison to longs, and they're taking into account the recent price trends in HRC and TMT prices and also seasonality. Remember, during monsoons, you have long prices that come under some pressure. Now, Investec, they have given their pecking order. It's Tata Steel, JSW Steel, and then JSPL. They say that they're taking into account debt as a percentage of EV, and also they're saying that the uptake in spreads will provide a higher delta for Tata as well as JSW Steel in comparison to JSPL. On JSW Steel, they've upgraded their rating to buy from hold, and also their target price to around 850 rupees from around 770 rupees earlier.
All right, got that. Thanks very much, Nigel, for explaining Investec's view and what makes them a little optimistic on JSW Steel. With that, let's actually listen in to JSW Group Chairman and MD Sajjan Jindal. He was speaking to CNBC-TV18 from Monte Carlo, where he's representing India at the EY Global Entrepreneur of the Year Awards. He's speaking about, of course, JSW's own growth plans, their capacity expansion, and the expectation or the requirement for steel in the coming few years.
Right now, we are at 28 million tons, and our idea is to go over 50 million tons by 2030. Which means that we will be increasing our capacity by 40%, if not 50%, or if doubling. At least 40%, that means 23 million tons capacity we will be adding. The thumb rule in steel industry is that for every million tons, you have to invest at least $1 billion, if not more. So therefore, we are talking about close to $25 billion in the next 7 years.
Okay, well, that's Sajjan Jindal there with plans outside of the steel business going forward. Mithun Aswath is with us, Managing Partner at Kiva Advisors. Mithun, good to have you with us here. Thank you for your time. Occasionally we get these pullbacks, don't we? We saw something similar with the Nifty Bank a few weeks ago when we got very close to all-time highs. Then I think for a few days, the Nifty Bank went a little sideways and then finally, of course, reclaimed those highs. So maybe this is a repeat, one doesn't know. But do you, by the way, have any views on IEX, Mithun? Do you own the stock? Do you track it? It's selling off sharply.
No, Prashant. This is not something that we track closely. So we don't have a position there.
Okay, no, got that. We'll actually have our colleague Vivek come up and explain why the stock is selling off. Let's have the stock up. Nifty, by the way, is down 80 points. Mithun, just a broad index view from here. Mithun, how are things looking? It's been pretty much a one-sided market, right? Firmly, in the bull corner, and then occasionally you get these shakeouts as well. But what's your view?
I think, Prashant, over the last few weeks, you saw a lot of FI flows into the market. Over $5 billion came into the market in May. And also, this led to quite a broad-based rally. You saw a lot of participation in the mid and small caps. I think the market has taken a view that interest rates are not likely to move up in India at least. And for that reason, you've seen markets, deliver good returns. And the expectation is after a pause, potentially there could be a rate cut. It could be, 2-3 quarters from here. However, yesterday, I think two central banks surprised with rate hikes, both the Canadian and Australian central banks. And we've also seen a little bit of a bump up in the 10-year yield in the US. And that has caused some sort of worries on the international front. I think, the NASDAQ was down close to 2% yesterday. And this is having a rub-off effect in India. I think what is more important is to hear what the Fed talks on the 13th, 14th, when the US policy is there. And I think that will be quite critical because I think the CPI data is also on the 13th. So that will give a more direction to global rates and if the Fed is not too hawkish, that would kind of assuage fears and, we could resume some sort of upturn.
Mithun, afternoon, Rima here. Correct me if I'm wrong, but PB Fintech was one of your ideas, right, which you liked? So what have you made of this BofA report where they are concerned about the valuations? They're saying that PB Fintech is trading at twice the valuations of Paytm. Are you worried about, the kind of valuations of PB Fintech?
Not really, Rima. I think, this is one of the, companies on the new age side where, there is a pretty much certain path to profitability. Even the last quarter, there has been improvement in both the insurance side as well as the credit side of the business. And we do think, the company is likely to grow much faster than the insurance industry. They themselves are talking about 3x growth of the industry. So I think, PB Fintech is well positioned. They have a large cash pile of close to 5,000 crores, which constitutes about 15% of its market cap. So I think it's still well positioned. There has been a sharp up move in the last few weeks. But I still think, this is a good compounder if one has, a 2 to 3 year view. And I think it's quite well positioned.
Why PB Fintech over Paytm?
We don't cover Paytm. The PB Fintech is the one that we hold.
Okay, got that. Mithun, hi, good afternoon. What are you liking in the consumer space, if anything, at all? And trends are very different, right? Top end of consumption has been doing very well. That's evident in, prime real estate. That's evident in the really strong retail sales data, the auto sales data that we've got for May. But FMCG kind of dwindling along or twiddling along, if I can say. Do you like consumer? And if yes, what part, what sort of companies?
Yeah, I think, Surabhi, over the last maybe 1 year or so, you saw a lot of growth in the high-end consumption because there was a rural slowdown and, they were more impacted by COVID. But as things normalize, we are seeing, companies talk about improvement in demand from the rural side as well. You would have heard of, some two-wheeler companies talking about improvement in demand and giving reasonable guidance for the next fiscal. So we think, companies on the FMCG side, two-wheeler side, which did not see too much of demand from the rural side, will actually start seeing that in FY24. Plus, I think a lot of the companies on FMCG and auto will also see margin expansion because of the commodities also easing off. So I think that argument kind of bodes well for the entire corporate sector, where with the lower commodity prices and logistics costs subsiding, you will see scope for margin expansion.
Okay, all right, Mithun, we'll leave it there. Thank you very much for joining us and running us through, those themes. Appreciate it very much here. We're up, 75? We're down 75 points. 18,650 is where the index is trading at. And let's just take a quick look at the broader markets as well and see if there is anything by way of a large sell-off or anything of that sort. But volumes, that is. By the way, declines to advances, the gap has widened a little bit more, 2:1. But, so for example, Suzlon is coming off. Suzlon had run up quite a bit in the last 2 or 3 days. It's down about 8%. It's been the top volume traded loser since the morning, so nothing surprising there. Varun Beverages was down in the morning. It's down a little bit more, maybe 0.5%, 1% more, 4% lower now. IEX is down a full 8%, 137 on IEX. HPCA, so there's not very much new. HBL Power was there in the morning. HCC was selling off a little bit, 3-4%. So, maybe about 15 odd names with large volumes. That's about it, but not beyond that. Even within even today, within gainers, volumes are far higher, and that's interesting to see. Paytm, of course, we have highlighted, but names like Dixon, JBM Auto, Tata Tele Maharashtra, which is seeing a breakout, HEG, Card Trade, and so many more. We'll sort of touch base on some of these, some more of these in a bit. We'll take a break here. We'll get you what's happening in dealing rooms on D Street Chatter. My colleague Nimesh will get you that. And BTST trades after that. Stay with us.
Welcome back. Here with us on Closing Bell. Well, it is time for our special segment, D Street Chatter. Nimesh is here, as always, with all of that action. Nimesh, so a little disappointing for the bulls. I think central banks are now making people a little nervous about the way policy is going to go. But you tell us, what's the chatter been like in the dealing rooms today?
Hi, Surabhi. So the policy was a status quo, which was expected, and it came on the expected line. So no big negative surprise, so to speak. I guess it's largely a consolidation within this large range between 18,400 and 18,800. While the Nifty is down 70 odd points in today's trade, but even the feedback is there is no big panic selling, so to speak. In fact, I wouldn't be surprised if if the numbers are on the positive side by the larger institutions. That's the overall feedback from the dealing rooms as well. I guess there are first signs of profit booking in the broader markets, but again, that's been seen as quite healthy because we've seen a one-way rally in many of those mid-cap and small-cap stocks. So some bit of profit booking or some bit of money taking out of the table is actually going to be healthy, so to speak. So even there is no big panic selling, is the overall feedback. I guess two sectors which clearly deserves mention is metal names and the power sector stocks. Both have seen some bit of accumulation now, and there is some bit of sector rotation as well from the larger institutions. So net a consolidation day of consolidation, but overall feedback is there is no panic selling. In fact, there's going to be buy flows from larger FIs.
In terms of individual stocks, what are you picking up, Nimesh?
Hi Prashant. So in terms of individual names, the first stock is Kotak Mahindra Bank. The stock is down almost 2.5% at almost at day's low, and there is a big indication that maybe a large block is going to come very soon. So there is a large FI holder who is likely to sell half of its holding, and that's the reason why that stock is under pressure today. So that's the first one, Kotak Mahindra Bank. The second stock is MedPlus. Even in MedPlus, the feedback is there's going to be a large block deal very, very soon, and one of the leading private equity investor is likely to sell almost 2/3 of its stake in MedPlus very soon. So that's the reason that's coming to my charter list. The third stock is Sri Renuka Sugar. It's marginally down in today's on the back of bit of profit booking in the broader markets. But for the last couple of days, some bit of HN action seems to be back in this particular stock. And one of the reasons is maybe a large private equity investor who hold a large chunk, that seems to be largely over. The selling pressure from that PE fund is largely over, and hence it's come on the HNI radar of late. So that's the third one, Renuka Sugars. And the last stock is Religare. Again, this is one stock not usually comes into my charter list. For the first time in many days, many months actually, some bit of buying interest from FI seems to be back in Religare, and hence the volumes are going to be quite high in today's trade in Religare as well.
Thank you very much for that. Let's talk about IEX. The stock saw a very sharp decline in the last 30 minutes. Vivek is here with more on that. Vivek?
Well, IEX is the stock in focus in the last half hour or so. Like you mentioned, the stock has seen quite a bit of a sharp dip. This is on the back of the fact that based on a June 2nd dated circular, some sell-side analysts have gone ahead and taken note of the circular. What does the circular mention, and why is it important from the point of view of IEX? Let's understand that. The first thing is that one overhang as far as IEX was concerned was the implementation of what is essentially known as market coupling. Now, what's actually happened on June 2nd is that the Ministry of Power has gone ahead and directed the CERC to start the process of consultation and implementation of market coupling. What market coupling essentially means is that there would now most likely be one government entity where there would be price discovery that would happen, and then you would see power getting dispatched across the various short-term power trading platforms that you have, including IEX, HPX, and even PTIX. Now, this essentially what analysts fear would do that it would dry up volumes that IEX right now is the market leader. It has the highest market share. The fear is that it would dry up volumes for IEX in a significant manner. And this is what has actually led to the sharp sell-off. Now, along with that, there was another fear that if market coupling is gone ahead and implemented without MBED, which is essentially market-based economic dispatch, once again, clearly, it is the centralized scheduling of power. If that is implemented without MBED, it could cause a further risk to IEX. And in that particular circular, there is no mention of MBED. So again, it's being seen as a double negative as far as IEX is concerned. However, this particular development isn't come to fruition as yet. CRC will go ahead and hold implementations, get feedback, and only then implement. So it's still some time away, but it's an important development for IEX, and it'll be one that we'll be tracking.
Absolutely. Vivek, I just have a follow-up question. Power is a really technical subject, right? And some of these are, fairly new concepts for a regular observer of the capital market. So does this basically imply that if this new regulation comes in, then private power exchanges merely remain platforms where you match the bids, a buy and a sell? And price discovery actually is going to take place at the government level. Is that how we should read it?
That's how analysts are reading into it. Very similar prices for equity, prices for securities both at the BSE and NSE, are at par. So similarly, that is what is most likely going to happen even in the par short-term par trading market. So that is what essentially the market is looking to go into. That's what analysts believe. So what analysts are anticipating is that this particular price discovery process, which right now is happening at IEX, especially for certain segments, this could be done by a super exchange and most likely by some government entity. So that would probably answer a question in terms of you'd actually see price only order matching happening and not exactly price discovery.
Matching volumes, not price.
Not
price.
price.
There's no price discovery. And Vivek, we're throwing everything at you. I'm assuming you're an analyst, are also kind of just figuring this out. Since this is regulation, with IEX, every time there is this concern about market share loss to the new exchange, the not so new exchange now. But if this goes through, it's for everyone, I'm assuming, right? This is not IEX specific. This is regulation for exchanges, private exchanges.
Absolutely right. And actually, because IEX is the market leader and because IEX offers the benefit of liquidity.
He's got most to lose. But it's not as if, IEX, if this goes through, everyone hurts in that space, in the private power exchange space. Thanks very much, Vivek. Good getting that detail from you. Actually, we should try and have a power analyst join us as well, maybe, to add to what Vivek was explaining to us. It's a sharp cut. Rahul Mohinder is back with us for a quick short-term trading ideas. Rahul, good to have you with us here. IEX, how are charts looking and what would you want to trade? By the way, from the last time we spoke, markets down another 30, 40 points, 100 points down now on the Nifty.
As I mentioned, still in the gear of, a correction. Now, the point is, if you're worked up about the next 100, 150 points, even if that moves down, in my eyes, from a primary trend perspective, we're still going to stay solid. We're not really breaching something significant. So, if you're just worried about that very short-term trading perspective, I think I would say that, that would be penny wise, pound foolish, try and focus on the bigger picture, use this correction as a correction, which you should look at, from a buy breakout point of view. We haven't yet got that buy breakout. As I mentioned, I would have liked to see, 18,700 clawed back on a closing basis, and that would give me some substance to buy. So I think one has to, again, rotate to individual stock names. So let me give you my two ideas. Both strong spaces today. Jindal Steel, it's been in the news, but 550 is a target for me on the stock technically. With or without the news, I really like the metal space. That's where all my focus is probably rotating towards, in the last day or two. 523 would be a stop loss when I buy for that 550 target. Finally, Power Grid is another stock which I think is worth buying. 237 could be a stop loss here. I expect the stock to move to about 253 in the near term.
Okay, got that. Thanks very much for all of those details and the calls there, Rahul. We do have to take a very quick break. We'll come back with more on the markets in just a bit.
Okay, welcome back. 6 minutes to go for close. We are, I think, just down 100 points, 88 points. So there is some pullback, 10, 12 points or so. Amrish is with us with a quick take on things. Amrish, brief thoughts first on IEX. I believe you have a view.
Yeah, good afternoon, Prashant. Yes, I have a view. In fact, for exchange, I think the more clearly is that it's a platform for price discovery and determination. I think that mode will be taken away with this announcement because with the MCO coming in, that will change the complete structure for the existing exchanges. And power exchanges will now be acting like a post office, obtaining bids from the clients and forwarding them to MCO, getting the price from MCO and passing it back to the clients. So because of which, I think it will lose value. And I'll not be surprised if we see levels of even 120 or less than that.
So volumes and margins should get impacted for IEX, according to you?
Margins, surely. Volumes to a certain extent, possibly.
So if I am a client, I'm a company, and I need to buy power, do I still need to go through IEX at the price which has been discovered by the government or determined by the government? Or can I directly go to the power generator and buy it, since anyway the price is known?
I'm not too sure as to how that will play out to bypass the exchange and go directly.
Okay. Amrish, let's talk about some of these shipbuilding stocks. I mean, we saw all the excitement around Cochin Shipyard. Mazgaon dock was going through the roof. Then the news came in on Mazgaon, their tie-up with Sencrypt. I believe you like one of these shipyard companies as well. So tell us more.
In fact, I like both the Mazgaon as well as Cochin, but both have moved up decently well. So the next one in the line is Garden Reach Shipbuilders, which is again a premier shipbuilding company under Ministry of Defense, and it designs and constructs warships for Indian Navy and Indian Coast Guard. So till date, they have delivered about 107 warships to Indian Navy and Coast Guard, about 780 vessels for maritime security. And they are also into commercial vessels and manufacture engines. They have an engineering division which constructs portable bridges and deck machinery items. And we just discussed, government focus clearly is on defense and Make in India, which is clearly reflected in the order flows for Garden Reach. So if you look at FY23, that is a good year, 44% growth in revenues, earnings went up by about 20%. They have a strong order book position of about 24,000 crores, and more importantly, execution is keeping pace. So expecting a 40% CAGR over the next 3 years. Expected EPS for FY25 is about 58. And I have a price target of 696 for the next 12 to 15 months.
Okay, this, if the market pace is what it is, 12 to 15 months is like, you'll get it in... well,
it can happen in 15 weeks.
Amrish, markets though, near term, what do you make of this pullback today? Any thoughts?
Like I was discussing last week, same day, that I think the markets have reached a congestion zone because, I mean, the way we have moved up in one line from those 17,000 lows. So 18,500, 18,700, I said, was the congestion zone. So that's where it has more or less stopped as of now. I mean, I see some amount of correction from these levels. It will not be a deep correction, but it will be a small correction, especially in the large cap, whereas you will see action more in the mid cap and the small caps for the next couple of weeks before the next move up. And I assume the next move up would be possibly sometime in August, September. I mean, that's the time we'll clearly know as to how the monsoon spread has been. So I think post that, we should see an extremely good move. But let me tell you that this could, in fact, be the beginning of the next huge bull run, and possibly we may not have seen this sort of a move, at least in our lifetime. So I think the next 4 or 5 years will be great time for the Indian markets.
Okay, so if you're optimistic, Amrish, then apart from Garden Reach, what else? Any other interesting name you'd like to share?
In fact, I mean, I've been bullish on Tata Power also, which I think I have suggested on the show a couple of weeks back. So that's the other one where, in fact, I have a price target of about 260 or so. But then if one is talking of a much longer term, I mean, this can be a multi-bagger. The other favorite, which I've been suggesting for quite a while, has been Mahindra Holidays, which has, again, steadily moved up in the last 1 year. I think it's given close to about 40-50% return in the last 1 year. Again, that I mean, that also can be a multi-bagger if one is talking of the next 4 to 5 years.
Okay, all right. Got that. By the way, I remember you liking, maybe from a short-term perspective, IOC. This is some time back. There's news there. Government's nudging companies to lower prices. Any thoughts, Amrish?
I think the game is over more or less for I mean, the oil marketing companies because possibly come September, October, we will see the retail prices will have to be lowered. In fact, they had kept the retail price same when the oil price was coming down. So they made decent margins in the last I mean 2 quarters. They'll possibly make a decent margin in the next 1 quarter. But beyond that, looking at the elections, I mean later this year and of 2024, I think the price will be reduced and possibly there would be pressure on the margins.
Amrish, it's a pleasure. Thank you very much. Great speaking with you. Thank you for your time here on CNBC-TV18. We will end not at the day's lowest point, but not very far away from it as well. We're down 85, which means about 20 points off the day's low. 18,645 is where the index will be ending. That's just under 0.5% cut. The Nifty Bank will end about 0.6%, so the Bank Nifty had it a little worse. And let's just look at the small cap index, which has been the clear winner. That is down almost a full 1%. And we've got the mid cap index, which will end about 0.5% lower as well. So, I mean, market breadth about not quite 2:1, but close to it.
Well, the notable gainers include power names, NTPC as well as Power Grid. NTPC is now the top Nifty gainer, 3.1% higher. JSW Steel excited with the ambitious expansion plans of the group. On the losing side, Kotak Mahindra Bank, Axis Bank under pressure. Grasim lost close to about 3%. You had softness in Sun Pharma, Apollo Hospitals, M&M Eicher Motors, Tata Motors after the recent run-up in the auto pack also saw some profit booking.
Absolutely, so some profit taking all around, including in the mid-cap market. Of course, in terms of news, I mean, the big news mover was IEX in the last half an hour or so because of fresh news that's coming in, possible regulatory developments that could be negative for the stock, 8.5% down over there. Aside of that, if you're looking at some more names where we saw some profit taking, Varun Beverage can be counted in, Indian Hotels, which has had a dream run, also down about 3.5 to 4%. Of course, all of the OMCs, the oil marketing companies, were reeling under pressure because of an expected rate cut, not rate cut, actually fuel price cut. So BPCL, HPCL, IOC, all of those stocks were down and out. Some of the railway names like Aircon also lost out some ground. Having said that, there were some gainers as well. Paytm is one of them, 6% up on the Bank of America note. Some gains on Graphite India. Actually, some of the commodity stocks, I mean, they've held out, and that's entirely because of this talk of China stimulus. So that's why some of the metal stocks and some of these graphite names did better than the rest of the market. But otherwise, a day of profit taking. Well, with that, we are out of time on this edition of Closing Bell. It's a wrap on this show. Many thanks for watching, but don't go anywhere. Our exclusive conversation with JSW Chairman and MD Sajjan Jindal coming up on the show.